How is everybody doing, bulls and bears? Thank you for joining in. It is Saturday. My name is JJ. You're watching Bull, Boom, Bear, Bust. And the financial economic news continues to pour in. We've got multiple crises happening across the globe. Economies breaking down, starvation, revolts and riots breaking out in many different countries. Massive inflation, food scarcity, you name it, it's all happening. Let's talk about some recent news here. We tie it all in together. The food scarcity has to do with economics. It has to do with your budget. Every household has a food budget, right? So we tie it all in together. But first, let's talk about what's happening over in the UK. Here in the US, we know that the Fed, they have been tightening. They have been shedding assets from their balance sheet. They have been raising interest rates. They have been allowing mortgage rates to rise. And this has caused the dollar to strengthen dramatically. And this affects the globe. It affects a lot of other countries because dollar denominated debt, a lot of countries are actually seeing worsening inflation now because of the strength of the dollar. And when the dollar strengthens, other fiat currencies that are not the world reserve currency, which is every other currency besides the US dollar, those currencies get devalued. You see how this works? When currencies get devalued, then it makes inflation worse. Just like when we had this massive printing scheme, and we're still printing, by the way, but the massive money creation and overstimulation of the economy causes inflation. It caused the dollar to decline. But now the reverse is happening. The dollar is strengthening, and a lot of other countries around the world are in big financial trouble. And not that we're not in big financial trouble here in the U.S., but things are unfolding in other countries much quicker than here in the U.S. We're going to see a collapse, and we are seeing collapses, but we're going to see more collapses over in Europe and other parts of the world before the United States feels the worst of the pain, in my opinion. Look what's happening over in the UK. Pensions almost collapsed in the UK. The Bank of England had to come in and buy bonds once again. They have reversed course. They're no longer tightening. The UK is buying bonds again, and that's setting off global alarm bells. Basically, the pensions are insolvent. They're over leveraged. Just about everywhere you look, everything is over leveraged, including your money in your bank account with your bank, Bank of America, Wells Fargo, Citibank, whatever your bank is, your depository institution, that money is leveraged. You deposit it, and immediately that money's gone. It's loaned out, and it's loaned out multiple times more than what your deposit is. So when you deposit $100, they're loaning out $1,000 and now beyond, because there is no longer any reserve requirement. That means the banks are insolvent. The only thing keeping banks from imploding right now is that they changed the law. Banks no longer have to have money in their deposits. I know this sounds crazy. I even question myself saying this, but it's so crazy. It seems unreal. Banks are insolvent. They've allowed the banks now to loan out money that doesn't exist. It's all digital. In other words, if you went in to take all your money out of the bank, and let's say a fraction, let's say 25% of the people that bank at this bank, your bank, go in at the same time to pull out all their savings and all their deposits. The banks would not have the money. And that's what's called a bank run. And banks are afraid of that. They don't want people discovering that the money is not there. And I'm sure that you've read stories of people that went in to take money out and they got questioned. Okay, why do you need the money? And you're trying to get your own money out. You're like, it's my money. Why are you asking me questions? Why I need my money? And then sometimes there's a delay. Okay, come back Monday and we may have it for you by then. Just all those little things that are happening right now that not too many people notice because not too many people are going out to take out huge amounts of cash, right? Most people just do digital transactions. Swipe the card, EFT, electronic funds transfer, pay your bills online. Very few people now are dealing in cash. In fact, of all the money in existence right now, less than 10% of that is physical cash, coins or bills. It's mostly digital. The system is completely insolvent. And we're seeing what happened over in the UK. Their pensions almost went bust. They had to come in with what many are calling rescue programs, bailouts. They had to buy bonds again. And it's just a matter of time before that happens here in the US. And that's when we'll see these markets start going back up, the stock market, the housing market. But for now, it's going to be falling markets, falling prices, falling real estate, falling stock market. Yes, you're going to see ups and downs, but it's a downward trend. It's lower highs and lower lows. So people see the stock market go up for a few weeks and they're like, what's going on? This doesn't make any sense. But you have to look at the long-term chart. Every time it goes up, it's lower than the previous high. That is a downtrend. Lower lows and lower highs, and that's what we're seeing. That's what I've been explaining here in this channel for a long time. So there's likely very few of us here on this channel that actually lost money in the stock market, right? Because we saw this coming a long time ago. As soon as they announced tightening and shedding of the balance sheet and rate hikes, it was obvious. We all knew this. All right, so Bank of England reversing course. Pensions almost became insolvent. They almost imploded. I think it's just a matter of time before something like that happens here in the U.S., before something breaks and forcing the Fed's hand to reverse course to start more QE, quantitative easing. That means more easy money, dropping rates once again, buying more bonds, buying the assets off of the banks, off of the businesses, off of the corporation. And anyone in the financial world that has any credibility is sounding the alarm. Michael Burry, famed Big Short investor, sounds the alarm on shaky markets and fears a worse disaster than the financial crisis. Yes, it is going to be worse than the financial crisis. Everything that we see today is much worse than what we saw back then. We're talking about 2007, 2008. Housing market came down, markets imploded, bailouts had to be implemented. Everything now is worse. Prices are higher, households have more debt. The cost of living much higher, supply chain disruptions, I mean, on and on. Everything is much worse than we saw during the time of the financial crisis. And basically, we've had to use fake money. We've had to use a Ponzi scheme to keep this economy chugging along. And ever since 1971, we haven't had a dollar backed by any physical asset. It used to be backed by gold. It's no longer backed by anything physical. Therefore, it can be created in unlimited amounts. And it's no coincidence that ever since then, ever since 1971, about 51 years ago, we've seen inflation just take off. It used to be that the average person could buy a house on one income, live a comfortable life, white picket fence, American dream, owning a home. And for people that couldn't afford to do that during those days, during those times, rent used to be a low-cost alternative to owning. Now we have a country full of people that can't even afford rent. Rents have exploded. Rent used to be a low-cost option. Now rent is the equivalent of what a mortgage was 10 or 15 years ago, and in many cases even higher. This is an economic disaster. Americans are in such deep debt, they're not going to get out of it. Now their rates are rising on their credit cards. People are swiping credit cards. Most people can't afford food. Most people can't afford a trip or going on vacation without swiping a card or going deeper into debt. And that's the sad reality. That's the sad truth. And it's no surprise that certain retailers now are seeing financial hardship because of the pullback in the spending. People are spending most of their paycheck on just keeping a roof over their head, keeping the lights on, and keeping themselves and their families fed, that now people are going to start pulling back on the luxury items, on the entertainment items. Now, a lot of times people say, JJ, I went to the sports game and the stadium was packed. Yes, you're still going to see a stadium with 50, 60,000 people packed full of people. But in a nation of 300 plus million people, that shouldn't be too big of a surprise. But overall, most people are going deeper in debt. They can't afford just basic necessities without taking on debt. Even people that used to take trips and vacations now have to go into debt to do that. Yes, people are still doing it, but you notice they're pulling back. Look at Carnival Cruise Line. Take a look at the stock here. Carnival Corp with the big cruise lines. Pre-health crisis was about $52. We're down to about $7 now. This is a disaster. The travel industry has been decimated. We see movie theaters going bankrupt or on Chapter 11 bankruptcy. And a lot of these businesses have been propped up with the Fed coming in and buying the debt off of many of these companies. Companies issuing bonds, which is a way to get rid of the debt. That way they can continue to pay out huge bonuses to their executives and CEOs. And it could be any day where this whole system could just become insolvent, and you look in your checking account, the money's gone, your pension is gone, your 401k is gone. Anything on a digital screen that can be bought or sold digitally by pushing buttons, you can wake up one day and it'll just be gone. That's why you see so many people, so many economists and YouTubers out there saying stack hard assets, because the end game is not going to be pretty. If you don't have something in your hand, if you don't hold it, then it's not yours, you don't own it. And that's why I continue to accumulate silver. I've got a link down below for those of you that are interested. SD Buoy, and that's where I get my silver. People still ask, and that's where I get it. I continue to accumulate it. It's a great time. The paper price is under $20. The physical you can't get for under $23. I haven't checked it today, but that's about the lowest that I've seen. 1 ounce of silver. And that's what's going to be the next monetary system after this fake money, fiat, Ponzi scheme, phony economy propped up on fake money, digital money. When this finally implodes, when the whole world is under massive starvation and a financial crisis, and they wake up and their accounts are cleaned out, then that's going to be the time when the transition is going to be in full effect, and you're going to wish you had what's been historically known as money, and that's precious metals. That's why I say continue to stack. Now, for everyone, that's different. For example, if you don't have enough food put away, if you don't have an emergency fund to last yourself at least 6 months to a year, then now may not be a good time to stack silver, because food, water, shelter comes first. But once you have those things, once you feel like you're pretty well prepared, start putting away some silver. And that's just what I'm doing. I'm not saying you should do that, because I don't know your situation. You may not have any food and you have a bunch of silver. That's not good either. But on the flip side of that, if you have all your assets tied up in something digital on a screen that can just be taken away at the push of a button or hacked, then that's not safe either, in my opinion. So that's why I always say keep stacking. Hope everybody liked this news today, like this report, like these updates. Please like, subscribe if you like what we talk about. Come back for more news, financial, economic, your money, my money. Thanks for being here, everybody. Peace. Keep stacking.